Hi, Josh Barker, and thank you for checking out our market update for the month of January 2022. Like we like to do each month, let's go ahead and kick off this month's report with our actual sold report for the month of December. I'll circle this for you in red. There was 265 properties that closed escrow in the month of December. And you can see that that's down quite a bit, almost 23% compared to last year in December when there was 343 sales. Now, this was expected. On some of our previous market updates, we discussed that a lot of people were purchasing from out of the area, were purchasing second homes, and there were some migration pattern shifts as people had more options of where to live, when to work. Add to that we had extremely low interest rates, and affordability in the market at that time was even lower or even better than it is today. So all that combined caused a higher sales volume last year, and that's why we're starting to see those sales numbers drop down this year. So the next report to put in, it'll be a slide I'll throw right over the top, and this is for our active inventory report. This gives you an idea of what types or what numbers of dwellings is available to purchase here in the marketplace. And currently there's 588 properties that are for sale. And if you look to the year prior, and I'll circle that for you in red, there was actually 608 in December of last year. But if you look at the historical part of this, last year, 12 months ago, we started the year at 608 properties for sale. And then that inventory began to get stripped away as home inventory dropped all the way down to 465 properties for sale last March. And then it started to slowly climb as we went into the early summer. And right now we're back up to 588 properties for sale. And it's likely that we're going to see that inventory continue to grow. Next point to go over is just our pent-up seller demand. Right now we see that there's many sellers that are actually thinking about bringing their homes to the market in 2022. They're starting to have the conversations with real estate agents. They're beginning to talk to contractors about some small remodeling they might be doing before going to the market. And we're expecting to see more of these types of sellers coming to the market. This pent-up demand was largely created because there was an eviction moratorium, so people that had rental properties they wanted to sell weren't selling. There was an actual foreclosure forbearance, which was a situation where if people were falling behind on their mortgage, they couldn't be foreclosed on, and those homes might be coming to the market just as regular equity sales at this point. And then we also had those who just didn't want to move anywhere during the major, the initial stages of this pandemic. So this is a big reason why we're seeing that seller pent-up demand begin to release, and we're expecting to see those types of properties coming to the market here in the spring. Next thing to talk about is rising interest rates. A lot of folks have been talking recently about the fact that the Federal Reserve did announce that they were going to raise the interest rates now 3 times in 2022. For every 1% that the interest rate increases, it can have an impact on purchasing power by up to 10%. So this is a pretty big motivating factor for some because they want to get in while there's lower rate. And we do expect this to have an impact on refinancing going forward, because if your rate currently is lower than what's being offered in a refinance, then some folks may choose not to refinance. So that's the impact of interest rates here locally. Next thing to talk about is whether or not it's a buyer or seller's market. A seller's market is typically, by definition, a situation where there's anywhere between 0 and up to 3 months supply of homes for sale. What that means is that if nothing else came up for sale, it would take up to 3 months to sell off the existing inventory based on the current sales volume. Right now, our absorption rate is sitting at 1.92, which means by definition, we are still securely sitting in a seller's market. Now, if you're wondering when a neutral market might show up, that's when home inventories typically range between 4 and 6 months. And then of course, for it to become a buyer's market, is anything above 6 months typically is considered to be a buyer's market. So again, we're sitting at 1.92 months supply, still a seller's market. And in fact, many homes that are accurately priced could expect to be sold in as early as 2 weeks, and in some cases with multiple offers. Next thing to talk about is just our home buying forecast. Right now, buyers are wondering what is a good time to buy, and really the answer to that was last year. But right now it might be today, because we are expecting to see home prices, as you can see in the home expectation survey, we are expecting to see home prices still increase by an average of 5% over the next year. That's what the experts are saying. There's some serious headwinds that could potentially have an impact on that, but as of right now, you can see that the average from the slide I'm showing you is projecting an average of 5% appreciation this year. It's not the 20%, fortunately, that we saw over the last 18 months, but it is about 5%. So the sooner a buyer gets into a home, maybe the less they'll be paying for it, and perhaps even a lower interest rate based on the fact that the Federal Reserve wants to raise those rates. So in any case, if you have any other questions regarding the market here in Shasta County, just know we're always here to help. I want to thank you again for taking your time with us today. Make it a great day.